All right, here we go, ladies and gentlemen. Welcome, 870-275-9799 if you want to contribute to the conversation. This morning we have public policy analyst, economics expert, and professor of finance from Stockton University back with us, Dr. Michael Busler. Dr. Busler, how are you, sir?
Good morning, Paul. How are you? I'm doing well. It's always my pleasure to be here.
Yes, sir. It's always our pleasure to have you on. So I wanted to talk to you about this piece that I saw. Let's see here. Trump says negative interest rates were discussed during a call or a meeting with the Federal Reserve Chairman Powell. Negative interest rates. What's that about, Dr. Busler?
Yeah, negative interest rates have been used actually in Japan to try to stimulate their economy somewhat. I don't think we're going to go that far. I mean, the Federal Reserve did realize that as the economy was attempting to finally grow out of a really 10-year stagnation, the Federal Reserve overreacted and caused economic growth to slow. Now, what do I mean by that? Well, they raised interest rates from the end of 2016 to the end of 2018. They raised interest rates 8 times. And granted, they were at rock bottom near zero, and they had to come up eventually, but they ended up raising them too fast. And just as the economy was breaking out of this 2% growth rate we were locked in for the last decade, finally starting to hit 3%, the Federal Reserve's action ended up slowing the economy down, and now we're struggling to get back to 3%. Well, the Federal Reserve realized they made a mistake. So in July, September, and October of this year, they dropped interest rates back down by a quarter of a point each time, and they also stopped their reverse quantitative easing, where they were shrinking the money supply. So they realized they made a mistake. I think, though, now they have them at about the right level. So I expect economic growth. The fourth quarter is probably going to be a little iffy, although I expect the Christmas buying season to be very strong this year, probably 4 to 5% greater than it was last year, so pretty good jump. But the GDP number will not be as strong as we like it. But going into next year, I think they've dropped interest rates enough that economic growth will pick up. And President Trump simply said, look, other countries like Japan have negative interest rates. We should be there too. Although, as you know, I'm a strong supporter of President Trump. I don't agree with him on that. As I say, I think interest rates are about at the level where they should be. And I expect economic growth in the next quarter, first quarter next year, to pick up.
Well, yeah, and I see that upon the mention or the reporting that they talked about negative rates, the dollar slumped. And, of course, this was a couple of days ago, but still, isn't that interesting, the psychological impact that one statement can have just from the president, you know?
Yes, it certainly is. So people behave based on their perception of what they expect the future to be. So anytime there's any information comes out that alters their perception, it is going to have somewhat of a effect. For instance, look at this impeachment that we're going through now. Normally, when we go through what would be a crisis like this, the stock market sees all kinds of uncertainty coming, and whenever there's uncertainty, people back off, especially investors. Now, that's not happening. In fact, the stock market is hitting record highs. So I think what the stock market, the perception investors have, and again, perception means a lot here, the perception they have is that the president will not get impeached. He really didn't do anything worthy of impeachment, is what the business community feels, or the investors feel. And as a result, they're sort of shaking this off. So even if the House does vote to impeach, they're fairly confident, the investors, that President Trump will stay in office, and his economic policies that have done wondrous things for the economy will continue.
We're just talking a little bit about, the big Democratic victory for the people of Hong Kong. I have this financial piece here, though, about Alibaba betting on Hong Kong for financial and political reasons. And there's going to be an IPO of at least $11 billion on the Hong Kong stock exchange for Alibaba. What can you tell us about that, Dr. Busler?
So Alibaba is a very large Google kind of company in China. They haven't been able to expand into Hong Kong previously, but it looks like they will be able to do that now. They're going to set up a separate entity to be able to handle that, and it'll go through the Hong Kong Stock Exchange, which is a little more like normal stock exchange. The stock exchange in China is regulated by the government. So investments there, while they're profitable and people have done well, there's another element of risk put in there because of the government. In Hong Kong, they're attempting to get more of a democratic government, and for the business community, that's a pretty good thing. So what happened in Hong Kong, recall, in 1997, British, England, which controlled Hong Kong, turned over control to China. And China promised that they would allow Hong Kong to have essentially a two-system government. So, which meant they still had to follow some of China's rules, but they could elect their own leaders and have their own kind of government approaching more of a democracy. Well, in the last 4, 5, 6 years, China has changed that, and they started to clamp down on a lot of things. What set off the protest this time was that China said, look, if somebody commits a crime in Hong Kong, we want to extradite them to mainland China to stand trial. And the people of Hong Kong knew they wouldn't get a fair trial, so they protested against this. China eventually said, okay, we're not going to do that. In the meantime, we started all this protest, and the people in Hong Kong said, we want our freedom. You promised democracy. You've been taking some things away. We don't want that. In the last election, which was just held yesterday, candidates who supported democracy and more freedom in Hong Kong did exceptionally well. That's what's happening over there in Hong Kong.
Wow. Well, we'll certainly be watching it. I mean, I'm telling you, I definitely think the rise of China, we've been talking about it a lot here, how, the Arkansas implications here in our state, because we're trying to bring Chinese companies here, and that's very troubling. But yeah, I think we got to be wary of what they're doing and how they have they definitely want to supplant us economically. Let me get an update from you, Dr. Busler, on the tariff situation, the trade war. Where are we on that right now?
So I think everything President Trump has done in this trade war has worked out very well. It's taken a little longer than we thought, but recall when President Trump came into office, he took a look at every one of our trade agreements, and for whatever reason, every single one of them was slanted in favor of our trading partners and to the detriment of the U.S. For instance, in the automobile industry, they make a car in Europe, sell it in the U.S., we charge a 2.5% tariff. We make a car in U.S., sell in Europe, they charge a 10% tariff. China, we charge them a 2.5% tariff. They charge a 25% tariff. On Corvettes, for whatever reason, they charge a 50% tariff. Well, what that meant was Europe and China weren't buying too many of our goods because they were priced so high as a result of the tariff. We were buying more of their goods. So when we buy more of their goods, money flows out of the country. When they buy our goods, money's supposed to flow in, but they're not buying that much. So we end up with this huge negative balance of trade. So President Trump said, we have to fix this right away. So he called all the trading partners in. Every single one of them was reluctant because they're in a good position. They're certainly in no hurry to change anything. So President Trump said, as any business person would, when you have a negotiating partner who's reluctant, you create a sense of urgency. So what he did was, he put tariffs on everybody, created a sense of urgency, and what happened? Mexico and China have come up with a new deal, although the House of Representatives are dragging their feet on approving it. But Mexico and Canada have come up with a new deal. Japan has signed a new deal. South Korea has signed a new deal. India is negotiating with us. And for the first time since we normalized relations with China, they're seriously negotiating a better trade pact. The original question was, what's the status of that? it looks like phase one has been worked out, and the deal should be signed shortly. Now, I'm a little reluctant to say that because back in May, we were at the same position. We had a deal with them. We're all set to sign. At the last minute, they started to throw in some things that we just couldn't agree with, mostly with intellectual property rights, and that deal broke down. I think they've resolved most of the issues, at least in the first phase, and I do expect something to be signed shortly. But there's a lot of variables here, and the Chinese could come up with something at the end that kills the deal. President Trump says, if we can't come up with a good arrangement, we're not going to sign anything.
Well, and then even if we sign something, will the Chinese be trustworthy on that? I don't know. There's that one Hong Kong dissident, who says, Donald Trump, don't trust China. I think that's kind of sound advice, but at the same time, I hope that there's some resolution.
Yeah, I do too. China is really being hurt by this far more than we are, and the reason is this: we put tariffs on goods from them, steel and aluminum, and eventually it'll go down to clothing and everything else if something isn't signed. So that does raise the price somewhat here, but we can make our own steel, we can make our own clothing if necessary. The Chinese retaliate by putting tariffs on food, on the agricultural industry. The thing is, they can't make enough food to feed their people, which is why they buy so much from us normally and everybody else in the world. So now they put tariffs on food that raises the price of food. And remember, the reason American companies are in China in the first place is the labor cost is so low. So you have workers who get very low wages. Now you're raising the price of food to them. It's going to create, and it is creating, some severe problems, I think, putting a lot of pressure on the Chinese government. Their economy, which has been growing rapidly for decades, has started to slow down as a result of this trade issues. And I don't think China can last a whole lot longer like this. So I do expect them to come up with some kind of an agreement, at least phase one this year, before the end of this year. And I hope that bodes well going forward.
Dr. Michael Busler, appreciate it, sir. Have a happy Thanksgiving. We'll do it again soon.
Thank you, Paul.